Hey everyone, it's Ron Toy with the Ron Toy team at Cross Country Mortgage, going live to give you a market update. What's going on right now? What's going on around the world that will impact rates and what's coming up? Because we want to be ahead of this influx of business that'll be coming in, influx of changes. So we are proactive instead of reactive. So if you're a client of mine, I've probably sent you a couple of videos getting you prepped for this because we don't want to wait till September 18th into September for Fed rate changes. We want to make sure we're getting ahead of it. I want to show you what's going on in the market right now, what's coming up, and what to expect. If you're a realtor, if you're a lender, and this is a great opportunity for you to listen to some information to then go ahead and contact your clients, partners, investors to give them a little bit of update on the market. It's a reason to call. So that's why I do this is I want to make sure I'm empowering the people that follow me to have information so they can make an informed buying, refinancing decision, or be able to empower them to make to have better conversations with their clients. So let me show you the market, and I've got certain sections highlighted so that you understand what to ask for when you're shopping a rate. So let me move my big head out the way. Okay, so in this graph, go ahead and screenshot it. This is the chart on the 10-year. I'm sorry, on the UMBS 30-year 5.5% coupon. That's pretty much what everybody's trading on right now. So interest rates are going to be close to the same for every company. This is behind the scenes information so that you know what you're looking at. When you ask for the rate, ask them these questions that I've got highlighted. What is the bond market price, which right now is 100.76? And what is the coupon that this rate is attached to, which the coupon is the UMBS 30-year 5.5%. Why that's important, because if you see the other things, at the different times, the market has moved up and down. So you need to compare apples to apples. Sorry, just dropped my mic. If you want to compare apples to apples, you need to know that information. So, what is the bond market price that this rate is attached to, and what coupon is it? So that when you call the next person, hey, what's your rate? What's this? Now, there's so many things that go into impacting the rate: your credit score, your debt to income ratio, your occupancy type, property type, length of term. These are all important. But if you're just trying to get some basic information, this is what you want to ask. And also, the time is important so that you're making sure that you have a good conversation with people informed, because you don't want to get somebody who's telling you a low number at 11 o'clock versus someone else who might tell you something that might have a better connection with you, but maybe their rate's a little bit higher because you called them at 12:30. Bond market price, coupon that the rate is attached to. Bond market price is so important. Again, right now it's at 100.76. Why are we seeing this rebound? I'll give you some information. We've been seeing different economic reports coming down, which I'm going to pull that up on the next slide so that we have this. And I'm going to move, I always move out the way so that you guys can see it, so that you can, screenshot the information. So let's go ahead and get the background changed. All right. Let's see. I wanted to show you why things are getting better. So right this week, the Fed is meeting at Jackson Hole in Wyoming for their annual meeting. And last year's numbers compared to this year, why we're seeing rates rebound over the last, since the beginning of July, rates have rebounded over 250 basis points. Why? Here's the information. Core PCE is down from 4.3 to 2.6. PCE's next report's coming out on the 30th, so we'll even see that, and it's on trend to do this. Core CPI, 4.7 down to 3.2. Unemployment rate has risen, which means the Fed's policy of monetary tightening is working. There's job volatility. That's a good indicator that their policies have helped reduce inflation. 10-year treasuries down. The Fed fund rate, though, is the only thing that's remained pretty much consistent, and that's why they have to drop it depending on how things come forward. And let me show you. So screenshot that. Now I'm going to give you a couple of other important data points, because this week, let me see if I can get one that's got a little bit. This is the important data that's coming out this week. Tomorrow, the bond auction could be important. The revisions data is going to be important because that's going to be revisions on jobs, jobless claims, initial jobless claims. That's, again, an indicator that the Fed is looking out. If Powell's going to speak on Friday, and that could give us a hint if they're going to do a Fed fund rate cut, and the market's going to respond. But this is important because I want to show you, everybody's passing around this information right now. Screenshot this too. Everybody's got it. Everybody's going to show you why home prices are now becoming more affordable, because everybody's rates are going to be close. I already showed you the thing in the other image before. But this is what a 1 point drop in rate does to your payment. It saves you $263 a month. Now, this is huge. And this is why home prices have, we're going to see more affordability hit the market. But I also want to address some of the things that I've seen a lot of loan officers making stupid takes that piss me off, because I'm about helping consumers, regular everyday people. And I've seen so many others complaining about this. Oh, dang, it's too big. Let me get this in a different size so you all can see it. All right, let me see. Does this fit? Okay. A lot of people are complaining 25,000 isn't what we need. This is so rude to say that it is not going to help people buy properties. This is going to help regular people get funding they need to get the support they need to invest in residential real estate. They're going to also help reduce prices or slow inflation or the appreciation rates of homes by wanting to build another 3 million homes. But this is important. We want to help regular people. 25,000, if you take it to an individual level and helping a person with 25,000, yes, there's grant programs. Yes, there's down payment assistance. But this is mass marketed to everybody. And I get excited about these types of opportunities. I get excited when I hear that people are going to build 3 million homes. Because why home prices are going up so fast right now is twofold. Not enough inventory, but also when you have private equity companies with a very specific and targeted goal to buy up 30 to 40% of the inventory, and then they don't sell the properties like normal people when they live in it 3 to 6 years, not enough homes are hitting the market. And that is why we're having these problems. Now, let me show you. Thank you, everyone who's joined. I'm Ron Toy with the Ron Toy team, Cross Country Mortgage. I'm a licensed residential mortgage loan officer. I've helped about 2,000 families along their home investment journey in the last 10 years. Let me give you some more data because this is important. We want to see this happen. But as for every 1 point drop in rate, brings another 3 to 4 million buyers to the market. So that's going to be something to take in mind. With more people in the market, the more competition, could drive prices higher. But that doesn't mean you shouldn't get into the market. Buy what you can comfortably afford. This is a scary statistic. Look at how many average homes are worth $1 million plus now. This is why home ownership is so important. And I'll leave you with this next background, and that's going to be the it for background so that I can focus on answering questions and talking. But it's the home price appreciation data in our country since 1942. This is so important because one of the key pillars to building long-term generational wealth is home ownership. This is the home price appreciation data since 1942. Keep in mind that since 1942, we've seen recessions, we've seen wars, we've seen gas shortages and them having to do rations and every kind of thing in the economy. And this is how many times home prices have dropped since that time period. The reason it dropped in 2007 through 2011 was due to horrible, lax lending guidelines, predatory type lending practices. And they built the most amount of homes that in our nation's history when there was a huge drop in birthing rates and housing formations. I've shown you the chart. Actually, let me show you this one last chart so you can see the data. I want you to be informed consumers, not just listen to some random dude rant on TikTok. I wish this was a little bit smaller, but I'll move my head out the way. This is housing formations versus completions. And as you can see, 2007, housing completions outpaced formations drastically. And it did so for that entire time period when home appreciation rates went negative. But if you notice, since 2015, started to get there in 2014, home formations, which is people entering the age to buy a house, about 33 years old, starts to outpace completions. And that continues throughout. There's a huge amount of pent-up demand. And let me just show you another thing. Let me see if I can get this a little bit better. In comparison, in 2007, there's 4 million homes available for 11 million less buyers in the market. First, we ended 2023 with a 1.8 million. Right now, we have less than 2 million homes available for sale, with 11 million more buyers. Home prices aren't dropping anytime soon. Home price appreciation will slow. That's going to happen when we get 3 million more homes in the market. But we have to do the extra step that Harris is talking about, which is slowing down corporate investors, hedge fund companies, private equity from buying starter homes, residential property, small properties that are meant for first-time home buyers to build and grow their net worth. We have to slow that down. And that's something that's going to be important for our long-term health as a country, because as we continue to move forward and private equity wants to buy up everything. I just did a search because I was kind of getting frustrated at seeing the data about who owns what. And then I saw a TikTok the other day about seeds. Now, I'm not a farmer, but when I found out that farmers don't own the seeds that are in their plants that they plant and they can't reuse them without paying some kind of fee, I'm like, what? It's their plant. They grew the plant. But they don't own the seeds. Then you find out who owns the companies that owns the seeds, and it all goes back to the same 5 companies. And when you look at corporate subsidies and how much they cost our country, a lot of people are complaining about free money. If you see a loan officer complaining about 25,000 to regular people and they use the term free money, block them, mute them, because they are not out looking for you. They're getting their information off of right-wing crazy people information, and they do not care. Because are they talking about free money when we give out $100 billion a year in corporate subsidies, when they are currently recording record profits and putting it in our face, and then blaming us for inflation and saying supply chain issues when they own the supply chain? We have to work together as a country, communicate with each other, lower our emotional state so that we can have logical conversations. We want to help regular people. 25,000 in assistance for people to buy their first home is fantastic. Yes, we want this. We need this. Building 3 more homes, 3 million additional homes will be amazing. We want this. We need this. We also need to keep private equity and huge corporate investors away from single family residences. You want to invest in commercial? Great. Go buy the commercial. You want to invest in multifamily? Great. Single family? Stay out of it. Thank you everyone who's joined. I'm Ron Toy with the Ron Toy team, Cross Country Mortgage, licensed residential mortgage loan officer. If you have questions, put them in the chat. You can follow me. I usually do these on Monday, but I'm going to start doing them live throughout the rest of the year because there is going to be so many changes that are going to impact the market. And I want you to be prepared. You don't have to use me. This is meant to be a thing that you can springboard into a conversation with somebody in your area. Be happy to serve you, but this is meant to be educational. If you're a realtor or a lender, this is going to be giving you some information to contact your clients. I got those slides up. But the great thing is you can go to bls.gov and get all of this information yourself. I'm very much about connecting people with the right resources so they understand, instead of getting triggered by some BS article that is owned by the same companies that are trying to buy up inventory or telling the news media to tell you that this is going to be a housing market crash. If there's a housing market crash on the corner, why would hedge fund companies have a goal to buy up 40%? Go look up how many private equity companies bought up the inventory in 2023. It's going to blow your freaking mind. And this is dangerous. And I want people to be informed. This isn't meant to scare you. It's meant to motivate you, because home prices are going to continue to go up. This means an awesome opportunity to invest. Buy what you can comfortably afford. I think us collectively have moved past this idea of trying to keep up with the Joneses type thing. Buy what you can comfortably afford. If you're sitting your ass right now in a 1 or 2 bedroom apartment, buy a 1 bedroom to 2 bedroom apartment and have that property for 12 months. Great. It's not your forever home, but then you can leverage it as a rental property. Buy your next one as a primary residence, get a lease agreement on this property, and now you can offset your debt to income by the rental agreement. So of course, buy under your budget. It's better than renting, because if you're paying $2,000 a month in rent, that's $24,000 for the year, right? But if you could buy a $300,000 house, which is close with that payment, that $300,000 house on average is going to go up, let's call it 5%, which is $15,000 in 1 year. So if you add that $15,000 to your $24,000, you're looking at almost a $50,000 a year opportunity cost you missed out by waiting 1 year. And this is why more and more Americans are falling behind, because they feel like, oh, I'll wait to buy until prices drop, which I just showed you. Since 1942, it's only happened 6 times. There's been a couple times it stayed flat, but 6 times since 1942 has home prices dropped. But that also appreciated every other year in between. So that 1 year wait opportunity cost, because you gain equity 2 ways: principal balance reduction, which is forced savings. Every time you make your payment, you grow your equity, but also through appreciation. It's a long-term investment. This is why you need to get a new home. You don't have to sell it. You can hold it as a rental property. Buy it, but just buy what you can comfortably afford. And I'm not a realtor. I'm a loan officer. I help people get the financing they need to invest in residential real estate. If I could go back in time, I've said this before in my lives, and be a 20-year-old kid again, I would look for a 4-plex live in one as a primary residence, rent out the other three. With down payment and closing cost assistance programs and other options out there, you can get into a home for relatively inexpensive out-of-pocket costs. I'd buy a fourplex, stay in it 12 months, then go buy another fourplex, stay in it 12 to 24 months, then go buy another fourplex, stay in it 12 to 24 months, then buy another one, stay in it 12 to 24 months. And then within the next 5 to 10 years, I'd have myself, 5 to 10 fourplexes, so 40 doors, without ever having to put 20% down. Because if you buy as a primary residence, you can put, with conventional, after your first purchase, 5%. And so 5% down each time, and I can leverage the equity position and have this passive income that means I don't have to do anything other than what I want to do. I want to show people paths to freedom where they can buy their time instead of buying stupid crap you don't need anymore. And I was the chief of that. Like, I have so many stupid things that mean nothing. Cool tchotchkes, fancy watches, stupid stuff. And I'm like, you know what? What if this buys me time? And so then me and my partner Monica started thinking about that. What do we need to do to buy our time back? Investments, money in when we sleep, writing books, all of these options. But how can I share that with my friends and followers? That's why I started doing the Antique Curb Show stuff, because I saw people were having struggles saving up money for down payment. Because you can utilize grants and down payment assistance programs, which are phenomenal, but you'll still need your earnest, option, and appraisal money up front. And so earnest money is typically 1% of the sales price. So on a $300,000 house, that's $3,000. Option money typically is about $100, give or take. So now you're at $3,100. An appraisal is typically $500 to $700. So let's call it $4,000. Some people, it might seem insurmountable to get to $4,000. But what I showed them was, hey, on this app, I've seen some amazing things happen. And I've seen people, I like woodworking, so that was natural for me. And I call it Antique Curb Show because one of my buddies, when we were driving around, he'd see like cool antiques or furniture at the curb. He'd be like, yo, it's a curb show. Let's go. It's an antique curb show. And we go get the stuff. Go get free stuff from Trash Day around your house. Look on Facebook Marketplace. Get cheap sandpaper. Sand something, fix it, sell it, flip it. And if you make $100, great. Do that 40 times, and now you've got your path. But if you don't have somebody giving you tips and suggestions, because I also show you how to properly document the transaction so that it's sourced funds for closing. I've shown you how to list it. That's my plan on here, because I want to help people, the regular people, build long-term generational wealth through homeownership, not just wealthy investors who want to buy X, Y, and Z. No, how do I help the 25, the 23, the 20-year-olds who didn't go to college? She decided, or she decided, I'm going to go and get a job. I'm going to start my career early, get the experience. And if I decide to go to college later, great. But right now I'm going to go work. Or somebody who just graduated college is struggling to build their wealth. Let me show you to get a one-bedroom condo. Build your wealth that way. Every 12 months, flipping it around to go get you more. But utilizing down payment and closing cost assistance programs so that you can make your dreams happen. I'm not the only person who can do this. Go follow Cat Loans. She's on this app too. Carlos Munoz. He's another great loan officer. There's tons of great loan officers on this app. Just pay attention to what they talk about. Again, if they use negative words about a plan to give $25,000 to first-time homebuyers and call it free money, that's not a good loan officer. That is fantastic opportunity for people. We want to help people. And people will say, well, where is that money coming from? Are they complaining about when we give $100 billion a year in corporate subsidies? We won't hear the peep from that, but because they're activated and think that they're coming with some great information, that they are bringing something hot, and it's not. It's laughable. So the market is doing better. We're going to continue to see this as inflation comes down. If you go back and look at my stuff from the beginning of the year, I specifically talked about this point in the year. I said around September, because of the way inflation number and data's reports are going to be updated as we continue throughout the year, we are going to see rates come down towards the end of the third quarter, into the fourth quarter of 2024 and into 2025. Go back and look at it. And this is happening, and it's exciting to see, but this is where I'm hoping to get as much information out to as many people so they can buy what they can comfortably afford, whether they use me or not, so that I'm seeing people build long-term generational wealth instead of investors continuing to grow their stuff. Let me just show you some of the stuff. I had this. I wasn't going to do it on this live. This freaking blew my mind earlier. Let me show you this background. Fucking BlackRock. Pissed me off when I saw this. So I started doing research on like who owns what and who owns certain seeds in companies. And you start to look at everything is owned by BlackRock and Vanguard. And I'm like, wait a minute. Why? Top 5 institutional investors of BlackRock, Vanguard, all of these things. Why this drew me, like why I started looking at this is the seeds. Who owns the seeds? I was blown away by that. When I found out that the farmers don't own their seeds, it blew my freaking mind. I was like, no way. And then who owns the seeds? It's like Monsanto, China, this. I'm like, what? Corporations don't want regulation because then we need the EPA to make sure that they are not dumping poison into rivers and oceans. We've seen this in the past. They're going to lobby the corporations to try to get rid of regulatory bodies that oversee them, just like they did in 2017 with Dodd-Frank, which I was on my social media platforms in 2017, 2018, screaming at the rooftops about them trying to pull back protections on Dodd-Frank. Go back and look at it. Those were there to help protect us people who bailed out banks, who overinflated information, lending practices were trash. We as a country, individuals bailed out banks, and we put regulations in place to protect us from that ever happening. And regulatory agencies have been lobbying our politicians since, trying to repeal those protections, making it, and they say it's old, it's stifling growth. No, it is not. It's protecting future growth. And if capitalism is supposed to be so great, then we should have let them fail. And the same companies that owned all those banks back then still own those banks. Go look up who is the primary owners of Bank of America, Wells Fargo, JP Morgan Chase. It's all tracks back to the same people who are trying to get rid of regulations, buy up all the inventory, own all the seeds, own all the freaking grocery chains and everything. And we have to help everyone as individuals get in a position to have power and authority. And that is usually achieved through wealth. And that's why 2/3 of the wealth we have in our country is tied to the equity people have in their homes. 2/3 of the wealth in our country is tied to the equity people have in their homes. How do we help people get homes? I'm out here. There's other great loan officers talking about it. But if you have questions, put in the chat. What are you experiencing? Do you own a home? Do you rent? Let's talk about it. I want to answer and make sure people are hearing positive information because I'm in a group chat with a bunch of LOs on this app. And I've now seen, I think, one of them kind of go a little sideways with this concept of the Harris plan to help bring down home prices, to attack home prices. Part of it, their plan is to go after large investors and limit their ability to buy a single family residence. I think this is a fantastic plan. We need this. Also, to build 3 million homes. This is a fantastic plan. This will help make home ownership more affordable. But when private equity is going after the affordable homes, the inexpensive homes that most first-time homebuyers go after, they're making it harder to get in. Because if they can make it harder to get in, then the people themselves will almost self-regulate because they don't want their values to be impacted. So, oh no, we don't want this. Wealthy people have been manipulating us as a country, as an individual populace, by segregating everybody in the population. It's almost like if you're a Red Sox fan, right? Or a baseball fan. You talk about baseball in general, usually people get along. You throw a Yankee fan in the conversation, and now it's boom. But then you separate Red Sox-Yankee rivalry, it's back to loving baseball. This is what they want. Every different way to differentiate between people, it separates to where they can play on those fears, play on those things, and control, manipulate us. This is just facts. And so when you're looking at this and they're like, hey, I'm going to make it to where harder for first-time homebuyers to get in, why? And then they're going to blame immigration or this or that. But again, if we want to look at logic and reasoning, if they're concerned about the solvency of Social Security, how is Social Security funded? Through our payroll, right? So what if we let in and had a better process of allowing people to immigrate to our country and put in a rule that says, okay, for the first 10 years, we're going to add an additional Social Security tax for new immigrants. And it's going to be 10 years. And for those 10 years, you're going to pay X above regular people. because that would help fund us massively. That's why immigration is just a talking point to distract us from what's really going on. They're trying to take our privacy protections. Why was that important? And how do we know that this is big? Look who just bought up, is it Ancestry, for billions of dollars? Hello. The same private equity companies who are buying up inventory, buying up everything. They want our data. They're lobbying. And so then we look at that is my opinion, the hot topic in that. Of course, the privacy protection to have a decision between your doctor and the person in the room. I don't want them in that room. I don't want the government in my doctor's office. We deserve privacy. And so, but look at it from a bigger picture. Privacy protections. If corporations can get our privacy, and medical is for profit. That's why here in the United States, it's disgusting to find out how much chemicals are allowed in our fast food and our different snacks that are not allowed in Europe or different Asian countries or other developed countries. They're literally poisoning us in 4K. And what can we do about it? When healthcare is for profit and the same companies that own those other companies also own the insurance companies, they are not motivated to do anything to help us. And that's why we as people have to come together and communicate and help make a change. Again, money is power. If I can help more people build generational wealth through home ownership, that will give them a louder voice to have it heard and bring more change that we want to see. The reality is right now, home prices are high. It is what it is. But that doesn't mean you shouldn't buy. There's other areas, especially with how global the economy is now, and there's online jobs. Thank you for everyone who's joining. Ron Toy with the Ron Toy team, Cross Country Mortgage. I'm a mortgage loan officer, doing this about 10 years, helped about 2,000 families with their home investment journey, answering questions, ranting about the market. It's good. We're up another 12 basis points today. That means rates are coming down. We're going to continue to see them come down. If you're waiting to purchase for home prices to drop, don't. You are being lied to. Whoever's telling you that is not looking out for you. I showed you the graph earlier, the property appreciation data since 1942. If you're waiting for the rates to drop, I understand that, but there might be strategies to get the rate you're looking for right now while there's still availability to make deals happen for seller credits. Because for every 1 point drop in rate brings another 2 to 3 million homes back, 2 to 3 million buyers back to the market, increasing demand for already limited supply. This is important. I am going to continue to share this because history is watching everyone collectively right now. And where are we going to be when our future grandkids, our future people are looking back? I don't want to be on the wrong side of history. This is a pivotal point in our country for democracy. That's why I'm on here sharing all the time my thoughts on the election, money, market, mental health, because that is something that is going to help make sure that we are set up for success in the future. And combating the narrative when people are negative about helping regular people, when we consistently help bail out and subsidize corporations who are laughing in our face, posting record profits, and blaming us for inflation when they can control the prices. If they are showing record profit, that means that they gouged us. And one side has voted every single time to limit price gouging efforts. One other side didn't and has been trying to help. And yet now it's being thrown in their face. Well, look at this and look at this. It's like, well, let's look at the voting record, bub. That's why I'm here talking. We need to have this conversation because in order for us as a country collectively to help make the change we want to see, we have to communicate effectively and consistently over and over because, like I said earlier, history is watching. We want as many people to get into home ownership as possible because 2/3 of the wealth we have in our country is tied to the equity we have in our homes. I showed you the home price appreciation data since 1942. Home prices are one of the most stable and predictable measures of long-term generational wealth creation we have in our country. There is a reason private equity, hedge fund companies, and investors are buying up residential property at record rates because your cash on cash return is astronomical compared to buying stock. If you buy 10,000 shares and it goes up 10%, you made $1,000 that year. But if you took $10,000 to buy a property at say 300,000 and that property goes up 10%, that's 30,000. So your money, your $10,000 investment, your cash on cash return Who wouldn't want 300% return on their investment? That's what we're talking about. It's a huge difference, cash on cash, between the two. Let's call it 20%. Would you, if investors have to put 20% down, and that same $300,000 property went up 10%, that's 30,000. They still made 50% return on their money on their cash on cash. Most people are dying for 10% rate of return, 50% return. This is why they're buying up inventory. And then again, let me just show you one more time the chart so you have this and screenshot it, because this is something that you need to see and focus in on so that you do not fall behind further and further, because every year you rent, the opportunity costs are between 50 and 100,000 because you're not getting appreciation and you're not getting forced savings through principal balance reduction. But here's the home price appreciation data since 1942. Screenshot it. This is from BLS, Case-Shiller, go look. 7 times. This is why they're doing it. Don't let anyone lie to you. Now, buy what you can comfortably afford. Don't stretch your budget crazy so then if anything adjusts, because this is something that most loan officers won't tell you, or they should, but maybe are too intimidated. Your payment can go up every year. Your mortgage will typically be fixed, but your escrow accounts, your homeowner's insurance can go up, and your property taxes can go up. So if you already maxed your budget and you have an adjustment to your escrow account, you could be in financial ruin. And shame on the loan officers that don't go over that with their clients. And it happens, the biggest difference in how the property taxes, especially here in Texas, were filed before. And you can look this information up on the county record. So like if there was exemptions like over 65 or 100% disabled military, that is going to mean that property taxes are going to be significantly lower for that person than they would for a regular person. And so when it adjusts the next year, because property taxes are billed in arrears, you are going to have an escrow shortage. I have seen clients on new builds, because typically on a new build, they set the property taxes on the unimproved value versus the improved value. And so I've seen people have their payments adjust $1,000 a month, year 1 or year 2 of their ownership, because of their escrow accounts, because of the way the property taxes were set up. Now you can plan for it if the loan officer is going to do the right thing and tell you, because again, this is important information. That's why you need to buy what you can comfortably afford and understand the risks. It's not meant to scare you. But when you go into a new build, they're showing you a payment and you look at the property taxes and it's $100 or $200 a month, especially here in Texas, that is a danger. Look up the county, put in the purchase price, put in the calculator. I'll do it for you. I'll walk you through it. Now you'll be able to project what your payment is. Now you can save that aside so that you can pay that on a lump sum to your servicer so that you don't have that escrow account adjustment. Now they will adjust so that your future isn't negative, but this is dangerous. Also, there's a lot of homeownership insurance companies that are jacking up the insurance premiums. Huge. And that can cause it to be more expensive. Buy what you can comfortably afford, especially if you've never owned a home before. And that's like, if you're sitting in a 1-bedroom condo or apartment, 2-bedroom apartment, buy a 1-bedroom or 2-bedroom apartment. It's simple. I can walk you through it. Any good loan officer. There's a loan officer, I think, in my chat right now. His name is Tim Regan. He's great. Cat Loans, she's great. Carlos Munoz, he's great. There's great people out here that are willing to give you the information to help you grow your long-term generational wealth through home ownership. Let me move my head so you can screenshot this. This is home price appreciation data since 1942. Get the information yourself from Case-Shiller, BLS. Look it up yourself, but here it is so you can screenshot it. This is important. Think about what's gone on in our country since 1942. How many wars have we seen? How many recessions have we seen? How much gas, I forgot what the term for it was, but like where they started to make it where you had different days you could get gas on, and all of the craziness. And this is the only time home prices went down. But if you look at the years before, appreciation. Don't let anybody deceive you. Let me get rid of this background so we can get back to talk. But if you have questions, put them in the comments below. You can also reach me on my website. There's a link in my bio to schedule a time to talk. But let's get you on a plan. Even if it's 1 year, 2 year, 3 year, whatever it is, let's get you on a plan to build your long-term generational wealth versus someone else's. I'm out here to help you, but there are great loan officers. I don't want to pretend or ever make you feel like you're limited on who you can speak to. Take this information and use it as a springboard to talk to someone else. I'm happy to help you, but there's great loan officers on this app. Like I said, Tim is great. Carlos Munoz, Cat Loans, she's on this app. Talk to them, interview them. We're all a little different. We all approach this business differently. And you want to get into a relationship with a loan officer that aligns with your current and long term financial goals. They need to ask you specific questions during the what I call a B1 call. That's the borrower introduction call. How many doors do you want to own? That to me is a good pulse to see if this person is an investor or not. If they're like, oh, I don't know, what does that mean? Doors is a typical conversation that we'll have in investor circles where I own 200 doors, I own 40 doors, I own 30 doors. So that's a good pulse for me. If another good question asked, what's your passive income goal? If they're wanting to buy multiple properties, how much money would you need to make a month to not have to work your job anymore? To be able to be free, go make birdhouses out of popsicle sticks in Tahiti. How much do you need to make a month to do that? Great. Well, what if we can put together a game plan over the next 10 years? If you just execute, you can follow that dream, because the 10 years are going to pass whether you like it or not. It's going to happen. But are you on the right train tracks to get you to the goal and make it happen or not? That's why you got to interview your loan officer, because this is not about click a button, get a mortgage. This is about a relationship so that you are building long-term generational wealth. Most loan officers, especially when you ask them, how many properties have you bought over the last 5 years? Why that's important is the markets have changed and changed drastically. And if they haven't bought in this market, they might not be experienced in this market personally. Yes, we help people on a day-to-day basis, but it's different when it's your own deal. How many properties have you sold? How many properties have you bought? Do you own rental properties? These are important questions. What's your network look like? Do you have contacts with plumbers, electricians, with CPAs and financial advisors? This is important because as a loan officer, I want to add value. Your loan officer should be adding value to you as well. But if you don't know the questions asked, you might not ask them. That's what I'm here for, to empower you to make a buying or refinancing decision that aligns with your current or long-term financial goals. These questions are imperative. Ask them this, especially when you're shopping rate. What is the bond market price and coupon that this rate is attached to? This is important when you shop, because then you call the next loan officer and they give you a price and then you ask them that question. Either they're going to look like they got caught cleaning their room like, ooh, or they're going to tell you and they're going to be able to compare apples to apples. There's tools, there's resources. It's awesome. Yes, the market's high. Yes, it's expensive, but there is always a plan. There's a path. If your credit is low, get with a good loan officer who's going to give you a plan to help show you, hey, pay off this debt, do this, and we should be sitting in a good position. Maybe it's 12 months, maybe it's 24, maybe it's 3 years, but who cares? The time's going to pass, whether you like it or not. Are you on track to make your goals happen? That's my plan. And also, most states have down payment and closing cost assistance programs. And I just had a client, I shared this on my live, that got a check back for about $3,500 last month, because with the down payment and closing cost assistance programs here in Texas specifically, I'm sure it's like this everywhere, but we use T-Shack and they got 5% assistance and the sellers gave them a credit. So with those programs, you're allowed to get the amount, what are called POCs, paid outside of closing, back at closing. So the earnest, option, and appraisal money. He got all that back at closing for his first house, and it's amazing. So now he has some money to get some furniture, do whatever, but he didn't even know those programs existed. Do you know those programs existed? If not, reach out to me and I'll walk you through it. I can connect you with a loan officer in your state. That's what I'm here to do. And if you're in Texas, look up T-Shack. Look up Seth. There's so many great options. And us loan officers do all of that for you and walk you through the process. So there's not anything extra you have to do. It's just the program we utilize to help you get the funding you need to invest in residential real estate. But it's important. And a lot of people right now are concerned with the NAR settlement, thinking, oh my gosh, I can't afford to use a buyer's agent. The agents will negotiate for you. Get a good agent that will help walk you through it. And this buyer's rep agreement has been something that's been around forever. I don't know why this has been a shock, but most good agents have been using the buyer's rep agreement, and it walks you through the relationship. Because if you don't know this, realtors are 100% commission. So when they're driving around with some clients for a year, seeing 50, 100 homes, they're not getting paid for their gas. They're not getting paid for their insurance. They're not getting paid for their marketing. They get paid when a deal closes. And so some people are like, oh man, 3%, blah, blah, blah. 3%, think about the time expenditure of searching, putting together offers, driving people around, making sure that you're in the market and understanding the ebbs and flows, what building is coming, what industries are coming to that city so that they can help protect your equity. This is valuable. And price is only an issue when value is in question. And when you're looking at this situation, if you're wondering the value of the realtor you're hiring, that's a good opportunity to interview and just bring it up. They work for you. Hey, realtor, I'm concerned with this. I know that NAR settlement came in, and now they're suggesting that buyers might have to help pay for the buyer's agent's commission. What is our plan to attack this if we find a house that I love, but the seller is only willing to pay X? Have them walk you through that. This is important because I'm telling you from a seller, I have sold multiple properties, and I sold one just in November of 2023, so not too long ago. I paid full commission. Why? Because I want as many buyers in front of my property as possible so that I get the most amount for my home. So, negotiation, have your realtor submit an offer. What's the worst they can say? No? Okay, great. Have that game plan in place. If you're a realtor and you're terrified about this, don't be. This is a great opportunity to remind people of your value. Hey, I know that, and address it up front. Hey, I know a lot of buyers right now are concerned because of this different NAR settlement, and everybody's got their 2 cents and what it's going to do to the market, and is it going to drive prices up, and is it going to be baked into the seller's asking price and all this other stuff. Again, distraction tactics, magicians, the sleight of hand. They want you focused over here so they can over here. Remember the home price appreciation data since 1942. You're making your appreciation off the value of the property. So get in what you can comfortably afford. The rest will take care of itself. But ask your agent important questions. Like I just mentioned, if you're an agent, get ahead of it. Don't put it at the end of the conversation. Don't come at it timidly. Doctors, if they have to give the diagnosis of cancer, they're not going to shy away from it. Hey, here's your diagnosis. Here's what we're going to do to attack it. Same thing. We are helping people with one of the largest financial decisions they make. Maybe they do it 2 to 3 times their entire life. So we have to approach it with the same level of care and consideration as somebody who is giving a cancer diagnosis. Because if the loan is big and it's not a clear, concise plan on how to pay it off or pay it down or leverage that equity, it's like a cancer. It can lead to divorce. Buying or selling a home is in the top 5 stressful things a person does. Do it 2 to 3 times their whole life, maybe on average. That's why you need a good professional to walk you through this, to make sure you feel comfortable and confident. But that's where you got to make sure that you have everything on track for your own goals and your own plans so that you do not get distracted from what your long-term plans are. Buying a house, your first house, should be a chance for you to grow equity, understand the process, and learn from that situation and either use it as a rental property in the future or use the equity you've gained to springboard retirement, pay off debts, and buy your next property. That's what I did, and that's what I've given my opinions to several clients who are thinking about doing a cash out refinance to pay off debts. Because right now, credit card debt is at the highest we've seen in our country. It's over $1 trillion. So many people would be wanting to take cash out to pay off credit cards, but the house in itself isn't still fitting their needs. And I'm like, how long do you plan to own this home? Probably another 2 years, 3 years. Have you considered selling now? Because when you do a cash out, you can only get about up to 80% of your loan to value. And so, like for one instance, one of my clients, they wanted to get cash out to pay off $20,000 in credit card debt. Perfect, could have done it, but they were going to sell their home in the next 2 to 3 years. I said, wait, if you sell your home, you'll get $60,000 based off the sales price. You can use 20 grand to pay off all of your debts, 20 grand into an investment account, or so that you can pay your debts and service through that, pay off all of your debt, and have 20 grand in the bank and buy your next property. Blew her mind. So now they have a debt servicing account, they have paid off all of their debts, and they got into a new house that fits their goals. This is the type of strategies that can be put in place to help you build your net worth in different ways than just somebody trying to get a commission out of you. Oh yeah, let's do a HELOC. Let's do a cash out refinance. Pay off your credit cards. They don't tell you a good strategy how not to get back into credit card debt. Now have you not only charged up your credit cards and then rolled it into your equity in your home. Now you're going to charge the cards again, and you're in an even worse position. You got to get out of debt. We got to stop being a debt servicing country. And that's the plan with equity. If you're trying to pay off all your debts before buying a home, you can almost cut off your nose to spite your face, because if you're paying rent, you're paying a mortgage. It's just not your own. But that's why I talk about buying what you can comfortably afford. Because say like if you buy and if you can, say you make, let's say you're in a $2,000 a month apartment. Do you know if depending on your area, but I showed an analysis on here. You buy a $90,000 condo, one bedroom condo. It's decent. It's like 90,000. Your payment's going to be like $1,000. Now you're saving $1,000 a month, but that's easy to debt service with average rents around 2,000. So then you do a little updates on the house. Maybe you post it on social media. Make that your channel. Hey, here's my home investment journey. I'm going to buy this condo, start to finish, the whole process, posting about it online. Imagine that. That's why I'm on TikTok, because it says a little bit younger generation that follows it. Imagine this. You're in a position to buy your first condo, 80,000, 90,000, inexpensive. Your start to finish journey. And on this app, there's so many people that do renovation projects that show you how to and if you're in an apartment, usually the bathroom's smaller, kitchen's smaller. So you want to try your hand at tiling. Great. Document that on social media, make that your platform, and who knows where it could go. But now you've got twofold. You're buying a house, building equity. You have content for your channel, and now you're able to educate people and help them get to where you are. Because most people don't buy because they've never done it and they're intimidated. It is an intimidating process. But that's why you want to partner with a good realtor and a good lender who can walk you through the process and help you feel comfortable and confident with your decision. Now, I'm not going to be on here much longer because it's just a market update. I'm going to do these daily. We're up 12 basis points. We're at 100.72 on the 5.5% UMBS coupon. It's important to know so that you can shop rates with confidence. I'm going to ask them, what is the bond market price and coupon that this rate is attached to? If you have any questions, reach out to me anytime. There's the link in my profile for my calendar, my website. Shoot me an email. Let's set up a time to talk. Let's go. Let's get you on a game plan. Even if it's 1 year, 2 year, 3 years down the line, as long as you set up a plan, that's all that matters to me. If you have any questions, like I said, reach out, but I appreciate your time today.